Hi, folks. Thanks for joining us here at Street Smart Options for another great video. It's Jim Bunker, and I'm here with Jonathan Sherman today. And we're here to talk to you today about options trading strategies for beginners. Now, folks, if you've been watching us for a while, you know that we have a beginner level training and we have advanced training in our program. And you can learn more about that by subscribing to our YouTube channel here. So if you haven't done that, give some consideration to that so you don't miss out on any other great videos like this one today. And if you're doing that, think about hitting that like button for us. And also, if you're going to subscribe, you could hit that bell icon. That'll let you know when we have another great video like this coming out. So with that being said, Jonathan, can you take us through options trading strategies for beginners?
Yeah, so I was going to cover one strategy. I'm not going to cover a whole bunch, but this is a good strategy for beginners. And the way this is a directional trade. So it's a one-way trade and it's a long side trade. So all you got to worry about buying is a call option. And we're going to be buying a deep in the money call option. So then, if you're buying a deep in the money call option and it's a directional trade, right, then it's all about the underlying. What is the underlying going to do? So you got to pick the right underlying. And so I want to give you some hints today about how to pick an underlying stock that is likely to go up over the next 2 or 3 months. Now, at this kind of strategy, you're going to be right maybe where the stock's going to trend up. You're going to be right maybe 30 to 50% of the time, right? If you're really good, you'll be right 50% of the time. But I've been doing this a long time, and I'm right. I think my average ballpark for a trend, if I can pick a good trend, is about 40%. So, but that doesn't really matter because you hit a good trend, you make a lot of money, and you have to cut your losers short. So, you can be winning 1 out of 4, and if you cut your losses really quick and let your winners run, then you're still going to be making money in the end, right? So, so in this case, I have here Zscaler, and I've talked about Zscaler in other videos here on YouTube. And we recently re-entered this trade, and this is our Street Smart Options group on Facebook. It's you have to find it. You type in SSO into Facebook or Street Smart Options, and it's a group. And we have in here, we post regularly different stock picks and different options trades. And this was one that we put up on June 19th. And Zscaler at this time, and I'll kind of go through the analysis and why I was interested in it. First, a little brief background on Zscaler, and I'll just read what I wrote here. Zscaler offers cloud security to enterprises through secure internet access solutions and secure access to internally managed applications. Sales grew 51% to $190 million in 2018, and cash flow operations turned positive last year as well. So the value proposition for their customers is that Zscaler consolidates stacks of gateway security appliances into integrated, scalable, cloud-based security services that deploy in minutes without hardware or software to manage. And basically, it's replacing legacy software providers that companies would have to, they'd buy the software and then install it across all the different computers locally. And this cloud-based solution basically it replaces things like McAfee and other legacy security providers. And so it's convenient for companies because it's a cloud-based application. So anyway, and there's another company in here in this space. Zscaler is one of the leaders, and the other company is, the symbol is CLWD, it's cloud. And so that's a company actually recently went public and is also an interesting stock at this point. But anyway, getting back to Zscaler. So why is Zscaler? Why do I think at this point in time this thing has more room to run? Well, first of all, the business model is a good business model, right? It's a subscription business model. It's very sticky. Once a company gets in with Zscaler, they're unlikely to leave. They provide a necessary solution that companies need the solution one way or the other, right? They need security on their computers, enterprise wide. So either they're going to use Zscaler or they're going to use McAfee or they're going to use somebody, right? But because they offer a better solution than McAfee, a more convenient solution, and easily scalable, this is better for enterprises. So they have companies that are transitioning from the legacy applications to Zscaler, and then it's a very sticky business. So I would expect this stock to do very well over the long term, as long as the market holds up. But even like if you're like a 10, 15-year hold, this kind of company could do quite well. Now, from a valuation standpoint, I'm not going to speak to the valuation of this. The valuations are a funny thing in the market. If the market's in a bear market, valuations are a lot different. People value these companies a lot differently than if the market's in a bull market, right? And right now we're definitely in a bull market in 2019, July 2019, although it's certainly getting old. So this kind of company is in an uptrend and will probably continue in an uptrend while this market continues in a bull market phase. So now looking at the stock, now besides, okay, they have a good business model, right? So that's a given. And so that's one reason why this is a good stock to look at. And it's a sticky business, so you wouldn't expect a lot of volatility in the stock price because you wouldn't expect a lot of negative surprises coming into earnings because they don't have a lot of customer turnover, right? And then the other thing is, now if you look at, what's the institutional interest in this stock? Well, it's a sexy business, and you'd expect to see a lot of institutional accumulation. You can see that this is a chart, and I'm going to skip now. I'm going to go right to stockcharts.com, which is a service I use. And you can see here is the weekly trading volume. Each one of these bars, the weekly trading volume in this stock, and each one of these bars is the weekly trading range for the stock, right? And so what you want to see in a good chart is you want to see a stock that goes up on big volume and declines on light volume, right? Because that shows that institutions are climbing aboard, but they're not selling much, right? So you want to see overall, you want to see the stock climbing on heavy volume and declining on light volume. And it's not going to be across the board. There's always going to be weeks where you have a heavy volume sell-off, especially after the stock has rallied. You'll see some heavy volume. But sometimes heavy volume is a little bit misleading because, like, for example, over here, if you look at this bar right here, you can see that that's actually associated with this red bar here, and this red bar actually closed in the top half of the weekly range. So this was actually a bullish volume indicator because it closed in the top half of the weekly range. It sold off, and then they bought it right back. So that was actually a bullish bar, even though it appears red on the chart. But you can see as the stock has marched higher, overall, you see more big green than big red, right? And so that's what you want to see. And now the other thing you want to see in this kind of chart, and this comes back down to, I'm looking at why is the stock going to go higher? You want to see periods of places where the stock has been under accumulation and traded quietly over a series of weeks and doesn't show a lot of volatility in the multi-week range. So if you look at this chart, you can see when this was an IPO, which is just recently, right? It traded very quietly after the IPO for several weeks, which is a really good sign because that means that institutions are in there accumulating shares. And now you notice this little sell-off down here, and it was very light volume, and that's what's it's a shakeout. It's basically the big traders. The big traders know that if it undercuts a recent consolidation area, there'll be some sellers that come in to that are just spooked out. And so they can scoop up those shares. And sure enough, as soon as the sellers were out, they scooped it up, and boy, that thing blasted right higher, right? And so then, but that accumulation is really important. You want to see that on these kind of charts. And you see it throughout this stock chart here. You see a little accumulation here, a little accumulation here, and then you have this quiet area in here. So the stock's been doing a lot of that. And over here, another quiet little area. So the stock doesn't really sell off that much. It has these tight accumulation areas and very positive price volume action. And then the other thing you want to look at, and I have this RSI here, which is Relative Strength Index, and I look at that because these stocks, what is the timing? When do you actually get involved in your long trade? When do you want to do it? Well, there's a couple places you can do it. There's one place you can do it, which is when the stock is emerging to over a recent consolidation area. So like this area here on the chart would have been a good area to get in, right? It undercut the low, it's a shakeout, and then it blasts right up over the consolidation. So that would have been an entry area right there for a long side trade. And then it consolidated again, and this would have been an area again for a long side trade. Now this didn't go anywhere, and you would have been stopped out, right? But then it consolidated. So this is a bear market. We had a bear market in the end of 2018. And so, but then the stock made a new high here again and consolidated. So this is another little entry area here. And then the stock, this was a winner, right? That trade was a winner. And mind you, when you're doing these deep in the money call option trades, we're talking about trades that last maybe 3 months, 3 or 4 months. And so, 3 or 4 months, that's about 12 weeks, right? Now it's 12 to 16 weeks. So, so this trade here, you can see, you can count the weeks. It's 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, right? So that was a 3-month trade. And then it consolidated again. And now I mentioned it in the Facebook group right around here, right? And so this is another area, and it's still in a buying range right now. So what kind of trade do you put on? By the way, it's also climbing. The 50-day moving average is really bullish too, because a lot of institutional traders come in and they buy at the support area, at the support line. So technically, this stock has a lot of stuff going for it, and fundamentally, it has a lot of stuff going for it. And then the other thing is that's good about this stock is it's a recent IPO, went public in 2018, and new is always better than old in the stock market, especially when it comes to uptrending stocks. New is always better than old. So now, mind you, this is a bull market trade, so you got to keep that in mind. But okay, so let's go look at the options chain for this stock. And this is Zscaler. I have it pulled up, and I'm here in Interactive Brokers. And so what kind of trade do you want to put on? Well, right now we're in July, and this actually is in a buying area still. July 10th is still in a buying area. And so, I would maybe look out maybe 3 or 4 months. So let's go look at the November 15 call options. And I'm going to be looking at deep in the money call option on this thing. And I'm looking maybe at the 40 or the 50, right? And so there isn't much time premium when you start going deep in the money like this. The stock is trading at 83. And let's see if that was what it closed at in the market. It closed at 83.29, so it's about the same. So sometimes it's after hours movement. So okay, so it closed around 83.29, and so the intrinsic value of this $50 stock is 50 is 83.29 minus 50, which is 33.29, and so the midpoint on this thing is about 34ish, right? So if you get into this thing around 34 and a half or so, you're only paying like a buck for the time value in this option, and this is like November. So you're getting a leveraged position. Instead of buying 100 shares of this would set you back $8,300, but at the 50 strike, you're controlling 100 shares, but it's only costing you, in this case, $3,400, right? So it's costing you less than half of what it would cost you to control 100 shares if you just bought the stock outright. So what you're doing with options in this case, in this options trade, is you're leveraging your capital. You're taking a high probability trade, and you have in mind a stop loss, which is maybe 7% on the stock price, or 8% down on the stock price, 7 or 8% down, and you're getting involved at the right time. And you're leveraging your position. So it's a good strategy for beginners because it's really easy to execute. It's just one long side directional trade, and it's a leveraged position that will do better than the underlying stock because you're at a 50 basis, right? Every percent move in the stocks and every percent move in the stocks is going to be higher for the option than it would be for the stock itself, right? And you're only out money $3,400 or so, the midpoint. So that is the options trading strategy for beginners I wanted to go over today.
Fantastic, Jonathan. Thanks for that. So, folks, if you haven't already found us on Facebook, you need to find us over there because we've got a free group where we give information like that. It is over in the Facebook groups. You can easily find us there just by searching SSO for Street Smart Options. And if you haven't taken a look at our website is streetsmartoptions.com, where we have a comprehensive program that teaches these types of techniques and many other pieces about trading that Jonathan has come up with over the last 30 years of his expertise. So feel free to take a look at us there as well. And thanks for watching our video today. Have a great day.